Martin from Secrets, the channel for learning about trading and investing. Welcome to Daily Stock Market Analysis Show, where we look at what happened in the market during the day and what we can learn from that, and then how we can plan for a better trade for the next day. And this is analysis for November 3rd, Thursday, tomorrow, expiry day 2022. So what we had was a pullback, a bearish day today on both the indices, and that's ahead of the Fed event that's happening today, US today. And an expiry is there, weekly expiry, it's coming tomorrow. So the banks are stuck in 7 days and Nifty is not ready to give up the 18K. That's well above that. So let's get into the numbers and see what exactly happened in the market. Look at this. This is a daily chart of Banknifty. We have a bearish consolidation in 7 days. This could mean a lot. Momentum is still in the bull zones, but consolidating in the bull zones. Not with the momentum in the sideways, with the momentum in the bullish. That's something that could be an upside breakout potential. And while Nifty ignores the bands and then has been hitting far away from the moving average, and now today is a green day after a couple of, actually 3 gap ups, right? 2 gap ups basically last today. Kicker pattern gap ups, and now it has cooled off a little bit today, but still it has not reached the gap support. The immediate gap support, it's at 18,000 is held intact. That's what we are. How much did we lose? It's just 62 points in the Nifty and 143 points. It's less than 0.5%. It's 0.35% all that's lost in both indices. That's really nothing. It's just a halt. It's a pause. That's all. And intraday it was downtrending from the beginning. In the opening it attempted to move up, but it failed to the selling pressure, and then from there on it was trending downside move. That's the same bank also till the end of the day. Positive thing is that the moving average is much below. You know, these are called the moving average on the are way behind. No, that's a good thing. But we have the crucial resistance from where the Nifty has already broken. Bank Nifty still seems to be consolidating just at that resistance zone, doing nothing since the 7 days, and then probably with the given the good momentum of the Bank Nifty still in the bullish zones, it could be a calm before a storm. You never know. So that's the price action, and the support and resistance levels remain the same. Nothing has happened by today's movement. 18,351 is the resistance upside, 18,605 is the resistance after that. Downside 1823 is the support downside gap, and 17,839 is the support. That's again another gap. Nifty 41,678 resistance upside, previous swing high 41,840, previous swing high after that. Supports at 4686 in the downside, and previous swing low at 4508 downside, another previous low if the first one is breached. Looking at the Bollinger Bands, we can see that it's upside move that is biases towards the upside moves. Bollinger Band is expanding on the upside. Bank Nifty also it's expanding, but look at today, it has taken a bend. That means because of the 7 days of doing nothing, no up move, flat, there is consolidation that can be visible, the beginning of a consolidation. Although the expansion is not, the skew has not happened, right? It's still expanding mode, but it has started the beginning of a contraction. The Bank Nifty, just in the Bank Nifty, Nifty is flying high. Absolutely no consolidation is there, right? That's what Bollinger Bands are indicating, something on the Bank Nifty, right? And something else on the Nifty. Right? But overall, it's with the bullish bias because it's far away from the medium. Too much far away from the medium also is an indication that it gets attracted towards that. That's also, but this is not that too much far away. You can't say too much. Momentum indicators are bullish, definitely. Nothing has happened there. Momentum is still in the bullish zones. There is a bearish interest, there is the daily charts on the Bank Nifty that remains there. But yeah, short-term bullish momentum continues there. Trend also is bullish, but it has been weak in the Bank Nifty. It has been rising in the Nifty. That remains the same today also. Wix has spiked up, but not much. Very little, 3%. That's 16.66. Still far away from the 20. Nothing to worry as of now. Already can be expected tomorrow because it's expiry day. The options writers would have their own game. Fyers operators is showing long unwinding for the Nifty. That's kind of bearish, and short build up definitely bearish in the futures OI for Bank Nifty. Levels tomorrow indicates 18,000 and 18,400 would be where the price moves happening. Holding 18,000 may be what that may be happening if it is a flat sideways move that is happening tomorrow. Banknifty 41,000 and 41,500. The fight for holding 41,000 maybe that's what is happening tomorrow, right? Or if it's breaking out, then it may head for closing at the 42,000. That's for the November 3rd weekly expiry that's happening tomorrow. PCR is closer to the bullish on the case of Nifty, but not bullish enough in the case of Banknifty. 0.68 is far away from the 1, which is the put call ratio, defined bullish levels, right? So overall mixed bag, you know. So options OI and PCR are showing that Banknifty's slight weakness is there in the Nifty, but severe weakness or flattish, not weakness really, flattish moves and sideways moves are seen in the Banknifty more. Looking at how the sectors performed today, pharma metal did move 0.5% up, approximately nearby, while auto, IT and realty sectors underperformed less than 1%, all of them, others were flat. All the sectors in the sideways momentum actually, none of them are in the bear on set list. IT, auto and pharma, these are sectors are in the bullish ones in the short term. RSI above 60 is what we'll talk about. Heavyweights, Reliance performed today, 0.5%. It's not a big performance, but that's the highest performance that you could see. In TCS, they all underperformed. ICICI Bank also underperformed from 0 to 0.5 to 1.25% of normal. All the heavyweights, the 5 heavyweights we are talking about, they're all in the bullish ones, none of them are in the bears ones, except ICICI Bank. They are in the sideways. They're fallen in the sideways, slipped in the sideways, you can say. That's about the sectoral watch and the heavyweights, for the market. And moving on, the institutional support is good. The Fyers are continuously buying since the last 5 days, since 1,436 crores of buying in the cash market today, while DAYS are booking the profit of the equal amount, almost 1,370 crores in this time. So basically DAYS are booking the profits while the Fyers are in the buy mode. So it's good institutional support for money is coming. It's positive thing, and the crude oil is kind of flat sideways, consolidating, not ready to shoot up above the 90 yet, but it's on the upside journey towards the channel top. It's still less than 88. As long as it's less than 90, it should be okay, right? So that's nothing too much to worry as of now on the crude. But worry is on the dollar side, which has been shooting up. Small pullback has seen today also, some falling. Flattish moves today, 111.2, that's multi-decade high, very close by levels still, and USD INR currency pair also 82.3, which is also very close to the all-time high kind of levels, and momentum is climbing the bullish once again. So rupee is not cooling off, it's spiking up. Rupee is at the weakest level ever, still continues to be that, which is a worry for the markets also. It will have some impacts, right? Gold is rising up after a fall off from the major support zone. Just trying to climb back. That's momentum is still in the bearish zone, you can say. Trying to climb back and settle it sideways is what's happening. SGS is now showing some red flattish moves. USD is also showing around red of 100 points down in the futures Dow. But you can see it only in the pre-market to know how it performed during the day. Today's US Fed event announcement that's coming out in markets. In the US could react heavily, most likely. And if that happens tomorrow, markets also could be volatile, but it's an expiry day, so global cues may not be taken that much because option writers have set the levels and then play their separate game on the options expiry day. But still, it can be volatile due to this fact that US markets have a major event that is there. So stock fix ITC was a pick in the earlier day also, but it still seems to be looking bullish. It's a breakout cup and handle from the end trenders in the bull zones in the short term, so it would give some opportunity on the upside. Tight stop loss in the next neckline. IRCTC, Indian Railway Catering Service, which had given good up moves earlier, has had retraced and corrected a lot, and now it seems to be coming back. So Indian Railway Corporation, it seems to, why this stock is coming, it seems to be having some kind of cup and handle, right? I had marked it, but it had marked it in the wrong place. So anyway, let's IRCTC Q3. So basically, it's I had marked in the VSC. So it's a rounding pattern, and neckline is there. It seems to be breaking out of that on the weekly charts. So it should give some good up move because it has been falling down. Now, if the breakout is confirmed on this, it should be fine. Momentum has also climbed the zones. So in the medium, traders betting on the short term for short term swing trade. So there could be a possibility that this trend line, neckline, could be a stop loss below this entry candle, and then it could give good up move. Right? Indian Tradeway, catering, IRCTC, catering and tourism. Right. So that's the long trade. So after having studied all these things, let's conclude something. Right? What happened today? It's just a pullback after 2 days of continuous bullish kicker pattern up move. It's a small pullback after a couple of gap ups and bullish moves. The Nifty, that's what happened. Banknifty has been doing the same. 7 days it has been doing nothing but consolidating. It's the same thing. But the thing is, 18K is still intact. It's not blocking that. It's holding that. Rising momentum, bullish trend, price action above the moving average, call off on the VIX, institutional buying continuing, put call ratio is good. And all seems still in favor of the bullish, but it has to be cautiously bullish tomorrow. Because market could reverse and then settle at the levels that is set by the option players. 18K is where expiry trades could be playing. Right? Market remains charts. What they say is it's still mild bullish, right? But cautious bullish because it's at a crucial zone still. The week is still yet to complete on the weekly charts, which are at trend line resistance on the top. Rupee is still having trouble at the 82 plus levels. Right? Dollar is shooting up. US market also is it a major resistance zone actually? After having reversed from the pullback, right? So whether it will be able to break out from that is what the question that everyone is looking at. Tomorrow is a Fed event, so we'll get clues on that only tomorrow, right? So this is what US market, Dow futures. So this up move that has happened from this is huge and good, very good. From 28,000 it has reached 32,000, but now it's consolidating there because it's a resistance also. Breaking out of this is not that easy. It's a channel top also. So there's a possibility that it can again go down and then go to the support zone. So a lot of dependency. If it is unable to sustain and break out from here, then it means again it could make big downfall moves possible. Even if it is not big, if it is falling continuously, our markets also, there is less chance that we would be breaking out. Right? So that is something you have to be cautious about, along with the rupee issue. Right? So we have to be cautious. This is what might be used for tomorrow, right? 18,351 is the next resistance upside, where we can say it's clearly breaking out. 16,650, 500, that's also supports and downside on the Nifty. So protect your capital, play safe. When the VIX is shooting up, then stay away from the trade or cut short position size. Otherwise, get in the game and manage based on the support and resistance levels. Right? Manage your risk. That's what you need to do. Okay. So that's a view. If this video has helped you in some way or the other to frame your view for the market for tomorrow or your trade plan in some way or the other, definitely subscribe if you're not subscribed and share it to your friends. Hit the like button, put in your comments, feedback and all that. So we appreciate your help in this regard. Thanks a lot. Happy trading, happy learning. Bye bye.